What's going on, guys? Welcome back to another video. Today we're going to be going over the JPMorgan International Growth ETF, ticker symbol JIG. This was requested by a subscriber to do analysis on it, whether it's a good buy for your portfolio. So this is an international growth ETF. I wouldn't recommend putting too much money into here. It is good to help diversify your portfolios. But as we can see from some basic statistics about it, volume is very low. Volume only has around 2K as of last Friday. And as we can see, there isn't really any rapid price movements during the day, as there is simply not enough volume. So not many people know about this fund. It is an international growth ETF. It is a dividend paying ETF as well. I believe they pay every quarter, which means they pay out a dividend every 3 months. And the dividend yield is not amazing. It is slightly under 1%. So it's 0.87%, just under 1%. It's not a huge amount, but you are getting at least something back from this ETF. Whereas some other like stocks or ETFs, they don't pay out any dividends at all. So that's just a little bit of a added bonus. So 1 year chart, it has done pretty good. As we can tell, it is a growth ETF, so it is investing in foreign growth companies. So it has done pretty well, and overall, I think that you can make some good money in the long term with this ETF, but the volume is just a little lacking. As you can see, the average volume is only 15K over the course of the past year. Let's get into some statistics. So with an ETF, as most ETFs have, they have expense ratios, which means every year you'll be paying a small fee to the fund managers for running the ETF, since they have to manage every asset inside this fund. So this one being an actively managed fund, you are paying a little bit higher of an expense ratio. It is 0.55%, which is pretty high. ARK ETFs have an even higher expense ratio, but they do provide some pretty good returns on their ETFs. So you want to keep in mind that you do have to pay expense ratios for holding these ETFs. And it's going to be much higher for actively managed ETFs. And as you can see, this portfolio is managed by 2 people. They do have a lot of experience in the industry, but this is a new ETF, so they've only been managing it for roughly a year. Let's go over why this ETF exists. Like, what is it for? What does it do? So it invests in companies across foreign developed markets and emerging markets. So it is pretty risky ETF. It is investing in growth companies. They're trying to find these companies that they think will grow bigger, innovate more in the long term. And it does have some good history. So another thing we want to check out is the holdings, mainly the top 10 holdings. That's really where we're aiming at. As we can see, there's some good recognizable foreign companies here. So we got Taiwan Semiconductors, Tencent Holdings, Alibaba, Nestle. We also got Sony, and we also got L'Oreal. So these are some pretty good companies. They're foreign companies, and they are also projected to grow over the long term. So overall, I think that this is a good ETF, but the volume is pretty low, so there's not going to be much intraday movement. I wouldn't put too much money into it. I mostly keep my portfolio within domestic stocks, so like just within the US. But if you do want to diversify your portfolio a little bit more, you can invest in something like this. An international growth fund would be pretty good. That's my analysis on JIG. It's a relatively new ETF. If this video helped you in any way, if you liked what you saw, please leave a like. If you have any more suggestions, please leave a comment down below. And if you haven't already, please hit that subscribe button. It helps out the channel a lot. Thanks for watching.